Over the last few weeks, Sanlam has been clashing with Finweek contributors around their recently introduced Sanlam Eco Retirement Annuity product. The argument is that the product is complex and expensive, and this negatively impacts the ability of South Africans to save. We thrash out the opportunities and risks associated with the product. Still in studio with me, I have Tandisizwe Mahlutshana, Finweek Deputy Editor, Jessica Hubbard, Finweek Journalist, and joining us, Craig Gradidge, a financial planner at Gradidge-Mahura Investments, and joining us from Cape Town we have Steenkamp, Executive Head of Sanlam Business and Professional Markets. Gentlemen, thank you so much for joining us. I think we all agree that South Africans need to shift towards a culture of saving. And having said that, I think the first thing to do is to acknowledge products that at least in their attempt try to do that. But for purposes of today, I think I want to start with the first question to you, Jan, in Cape Town, and ask you just to unpack the merits of this particular product from the Sanlam perspective.
Thank you very much, and thank you for this opportunity. I think you've just stated, and it's a very important statement that I think we need to start with, and that's the fact that South Africans simply don't save enough for retirement. Now, I think given that fact, as industry, we have a responsibility to innovate around the products that we make available to clients to ensure that we entice them to save more. And that innovation has to be in terms of product features, but also to make it more affordable, as well as offer better value to clients. Now, we recognize as Sanlam that not all clients are the same, and that clients have got different needs and preferences, and therefore I think there's also a need and a place in the market for different types of products, including unit trust type retirement annuities, as well as the product like this Eco Retirement Annuity that we're discussing today. Now, when we designed this product, we basically had three key or primary objectives that we wanted to address. The first is that we have to get clients to start saving early in the process, early in their lives, start when they're younger. Secondly, we have to get them to save enough, and what we find is people don't save nearly enough. And thirdly, and very importantly, we have to get clients to commit to their retirement plans and keep on contributing until the end. Now, with the Eco Retirement Annuity that we've developed and launched, the mechanism that we've used to address these objectives is the Eco Bonus. Now, I'm not going to go into too much technical detail, but the principle behind the Eco Bonus is to demonstrate the power of compound interest over long-term investing to people in the short term. The challenge that we have in the retirement industry is that we're selling a promise to people, a promise that will only deliver benefits 20, 30, or even 40 years into the future. And that simply is too long into the future to compete with the instant gratification needs that clients have, the iPhone, a TV set, or even buying a car. We believe that by making the power of compound interest tangible and visible to clients from day one in terms of long-term saving, we will be able to get clients to start earlier, to save enough, and like I've said, the third objective, to commit to their savings plans for retirement.
Jan, thank you so much for that. So I'm going to throw it back here to Craig and basically say, Craig, you've heard the Sanlam side of the story. You've interrogated the product, I understand, to quite a degree. What, in your view, are your key concerns about this particular product in light of what you've, how you've engaged with the product, and also in light of Jan's statement?
Right. Yeah, look, when it comes to retirement planning and saving for retirement, and particularly with the use of retirement annuities, there are a number of things that are important, that we as advisors see as important. Firstly is the tax deduction that clients get on the way in on retirement annuities. That happens across all retirement annuities. So it happens with Eco Bonus, it happens with every other one. Then the challenge is to ensure that costs are minimized, or I would say optimized within the product. So if a client wants advice, they must pay for that advice, but they must pay a fair price. And as far as possible, eliminate all expenses within the product. Thirdly, appropriate portfolio construction. So the clients must be able to structure portfolios that give them the highest chance of reaching the objective at the end. And then the fourth component, and this we believe is the most important, is that there has to be flexibility. Because when you're talking 20, 30, 40-year periods, you're talking very long into the future. And life has a funny way of happening, So you have no idea what's going to happen next week, never mind 20 years from now. And so that's our challenge with this product and many of the life underwritten type products is that when life happens, it's compounded with a penalty on their retirement savings, particularly on their retirement annuities. And these penalties take different forms, but there's some kind of punitive action from the life company. We've been around 4 years. We've built up a book of over 300,000-400,000 per month. So 2,000 rand from John and 4,000 from Jane, going into retirement annuities. We could have doubled our revenue had we put them into these, underwritten annuities. There's a great incentive for me as the advisor to put clients there. But it's not the right thing for clients, especially when I'm taking a 20-year view for clients. So the fiduciary responsibility tells me that I can't put them into something where they're going to potentially attract a penalty if life happens.
I just want to pick up on that very quickly, Craig. Has the need to encourage, people or South Africans to save led to too much creativity when it comes to creating these products? And when you look at these products, these companies have a business to run. Essentially, it's a business. Sure. Now, when you look at this product, is it a product that benefits me as the investor or saver? Is it a product that benefits you as the advisor? Is it a product that benefits the creator or the provider? Because someone has to benefit from this thing. It's created for the benefit of someone. Who is that? So
ultimately, it should be for the benefit of the customer, the client. But we see with some of these products is that if something happens, and I mean, I've had a case recently where a high-earning individual has had to stop his retirement annuity contributions. He's in the mining sector. He didn't get a bonus as expected, and there have been other cost pressures. He didn't get a salary increase. These are all factors out of his control. So when we stopped his retirement annuity, there were no penalties that applied. He would still benefit from compounding because his money will stay in there until he's at retirement. And as the conversation went, when things normalize, he'll pick it up again.
Yeah, now coming back to you, I mean, there's 2 points that have really been thrown in your court. The first one centers on this idea of flexibility. How would you like to respond to that? But in addition to that, can you also tackle the fee structure that's also been put on the table?
Absolutely. I think with regards to flexibility, I completely agree with those points. I think from Sanlam's perspective, we believe that the Echo Retirement Annuity offers very good flexibility. And I'll justify that in the following statements. But I think I almost want to go back to my original objectives, is that we have to remember that committed saving for retirement is crucially important. And generally what we find, and we've obviously as Sanlam been in the retirement industry for over 90 years, is that a lot of clients actually stop their commitment to their retirement products in favor of instant gratification, and that is something that's not to be, is not good for the industry and is not good for the clients in general. So I think that's the first point. But we do recognize that life happens, and I think Craig mentioned that if a person loses his job or doesn't receive a bonus, in some cases a business goes under and they don't have the money to pay for the retirement annuity. You have to have some flexibility to take into account those type of circumstances. That's why, as part of this retirement annuity, we have what we call contribution holidays, which enables people to stop contributing to this retirement annuity for up to a period of 12 months. But there's always the incentive to start contributing again. If the client can't make contributions for even longer than 12 months, they can make the product paid up, as we call it in the industry, so they can stop making contributions. And at that point in time, the echo bonus that the person will receive will not grow as fast as it would have grown. But the moment that he starts contributing again, once his financial situation changes, his echo bonus will start to grow again, and he will again get the benefits. So in essence, the flexibility is there. The philosophical difference between our product and a unit trust type product is that we really want to create that incentive to get the person or the client to start saving again. So I think that's the first part around flexibility. Maybe just one other point. Part of the flexibility that's required is also to be able to make your investment portfolio, or to choose between investment portfolios within the product itself. And we believe there's full flexibility both in unit trust retirement annuities as well as within this Echo retirement annuity, where you get up to 4 free fund switches every year, like I've said, free of charge.
Yeah.
So that for me is around the flexibility. Then around charges. If you view the chart, yes?
Before we close, I think we're running out of time here. Just one question: how has this product been received by the market? What has been the feedback from the advisors, from the clients? If you've had any, I understand that it's still early days.
Well, it is early days. It's merely about a month after the launch of the product. But what we can say is it's been received extremely positively. And I'll get in my closing remark, I'll explain why. But just as an indicator, Sanlam obviously is one of the bigger players in the retirement annuity industry. And roughly half of our product sales, retirement annuity sales, in the current month, is on the new Echo retirement annuity. So it's clearly been received with open arms by the market. And we prefer to think that our clients are well informed and are seeing the benefits that we have.
Jan?
Just to get back to the costs quickly. If you look at the marketing and administration charge in isolation, it may appear to be expensive. But the Echo bonus that we offer has to be seen in combination with that, and that makes this product amongst the most competitive in the industry across unit trust as well as life or underwritten retirement.
Jan, thank you so much. So we are running out of time, but that is a very interesting conversation. We'll definitely track how that product does in the market. So we're going to quickly befriend the trend, and the trend that we're looking at today is equity on the rise. Of course, just quickly coming to you, Tandisizwe, why is it a good time right now to be increasing exposures to equity?
I mean, I think the markets have been depressed for a long time, and I think we are seeing sparks of greatness coming out. The JSE has been pumping. Yes, there's been, times when it hit, it had to go down. I think one of those times this year was the infamous Benanke speech, which tanked catastrophically. But I think since then it's picked up. It's recording highs week after week. So I think it's time to put your money really into equities.